Welcome to the bank holiday edition of the Market Alert for Monday the 31st of August 2015. Starting off in the 5-minute chart, let's just go back to Friday. It was a fairly quiet session. In fact, there were better trades in the pre-market session, which you can see here for the 28th. This is the 5... let me just bring up the data line here. We've got 6:30, we had a trade up to the upside. The market then moved lower. And then we get around to the 9:30 news. That's why this is not a very good time to trade. There was a lot of high impact news items in Europe released at this time, which is why you're seeing the market struggle to move higher. The market eventually found some support and then moved higher towards the 11:30ish time. And then we see once the market's reacted, we then get a second reaction of going lower. We've got the signals there to go lower. And in the pre-market session, an hour before, 13:25, the market tried to move higher, came back and failed. And then we see the opening of the session. This is where you see the increase in the volume here. And then price is trading sideways before actually moving higher. It was a very quiet Friday afternoon, considering the volatility at the beginning of the week. And we saw a range of just over about 80 points for the whole of the afternoon session, which is quite something really, given the previous day's activity. And again, you see here the market struggling. And that's what I'm saying. There was more volatility in the pre-market session than there was in actually the official session. Again, prices moving higher there just to make up the losses there. So given the whole trading week, Friday was a very poor performing day by the previous 4 days standards. So on the overnight, things have livened up a bit. We've got the Dow down 200 points. This started at 5 minutes past 10 after the Jackson Hole symposium that had run over the weekend. No doubt the market opening later on and digesting what was said. And it appears that the Fed has still got a hike in interest rates on the cards for September. And if they do that, that's around September the 16th, I think, then all hell will break loose. That I can assure you, because we've already got the weakness in the background. We've got the global weakness as well. An increase in interest rates is going to send this market south big style if they do go and follow through with that. So one trade here, not going down to the scalp on the overnight, but you've already got 200 points in the market there. Now we've seen the market trading down to the 16,450 level, and then we've just had this long to the upside as well. So there's enough volatility at the moment, and I say that with caution and as a caveat. At the moment there's enough volatility to move the markets, and there probably will as well for the first part of the morning from around 6 p.m. to around 10 a.m. because the European markets are closed. The Asian market will be closed at 9 a.m. and that will of course quieten things down. So we could end up being a very quiet day, or it could be an incredibly volatile day. It's a very difficult one to work out because there's only the US open today. They will be closed next Monday, but today they are the only ones open. Most of the European markets will actually be closed in observation of the final bank holiday Monday for this year. So let's have a look at the daily chart, get a better idea of what's going on. Step back and have a look at the bigger picture. We've got the market coming off the highs of last week. You can see there the market moving lower on Monday, Tuesday finding support, turnaround Wednesday I think they called it, and the market up on Thursday, Friday, the narrowest trading range for the whole of the week. And there you see Monday now we're heading back towards the high of this bar, which I mentioned in the previous market alert. Watch the 16,435 level. If this is broken, you will see prices move lower, and you can see it's already found support at that on the overnight market. We are going back down to retest these lows. There's no doubts about that. It's just a matter of time, irrespective of the mainstream rhetoric that everything is fine. There's no way it's fine. There is so much in the background that isn't being reported by the mainstream that these lows are going to be retested and prices moved lower. In the news, what have we got today? It's holidays all round for the European markets and nothing really there. They're all medium impact news items. We've got the Chicago Purchasing Managers Index out at 245. That's forecast to come out more or less the same. Very difficult one to call today. Overnight reaction to the Jackson Hole Symposium already in the market, so who knows. The implied volatility also lower from Friday, which you would expect, 21.49, because the market traded sideways. This allowed the volatility to come out of the market. We're back about 35-40% now on the implied, a bit more, and then we'll have enough room to breathe for the market to move sharply lower once more. In the Far East, the Shanghai down 110. It's been down 2% or more this morning, but holding above the 3,000 level at the moment, but weakness still in this market as well. And what news have we got? Ron Paul rages blame the Fed, not China, for the stock market crash. Couldn't agree more. It's nothing but a Ponzi scheme pumped up by QE money. What else have we got? Chinese stocks slump after arrest fest. Yuan strengthens months in 9 months. Goldman cuts outlook as well. That's an interesting article about that continuing to gain strength even though they devalued. And then this is followed by an article on why devaluing the yuan won't help China's economy as well. JP Morgan, this is laughable. Nothing appears to be breaking, but something happened. A bit tongue-in-cheek there. They know exactly what's happening. They're sitting on 47 trillion of interest rate derivatives, or were up to the first quarter, 31st of March. So it'll be interesting to see if the Fed do increase interest rates, what the position they will be in when they blow up. And Blacker Monday looms. Dow futures down 220 after Jackson Hole speech and China fold. So again, there's a lot of real news in Zero Hedge if you want to have a look through over the weekend as well. Some good articles in there. Again, backing up the bigger picture and longer term case for a market decline of some size and proportion. Right, that's it for me this morning. I will see you in tomorrow's edition. Enjoy the day. The weather's appalling, but that's typical of a UK bank holiday. So all things being equal, see you in tomorrow's edition. As ever, thanks for your support and also for watching. See you in the next one.